Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the March 6th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. This is the place where we break down the NDPSR report. Let's start this week with butter. This butter number coming in at 281.89 represents a plus 1.5 to the CME 1 week average of 280.31. So that's about our average basis. We expect 2 over typically. So reasonable basis here from the manufacturer at the high end of the recent butter range. We also traded 31 loads on the CME, and that didn't do much to pull that basis down, still holding in at that 1.5 over. But even with that 31 loads on the CME, we still only managed to print 2.994 million pounds on the NDPSR. So about 500,000 below what we would expect on volume, average basis in butter. All in all, it looks pretty much like it's chalk in the butter for this report. Up next is our two varieties of cheese. First off is the block 161.14. That represents a plus 8 to the CME 1 week average of 153.15 plus 8. That's really nice basis. So we're back to this elevated basis in the block when you are talking about the NDPSR compared to the CME 1 week average. We traded 12 loads on the CME last week, so not a whole lot to alter volume there. As I said, the manufacturer was able to gain above expected basis, but that came at a cost. Look at this volume. Once again, down at that 10.2 million pounds level, and the run of lower than expected volume in the block continues. Big disappointment here, almost 2 million pounds under. It's interesting, we just received a little confirmation of what's going on in the cheese on the most recent cold storage and production reports. Looks like our production has been down in the cheese category, while inventories have remained steady. So we're seeing that here. Sales down, looks like production's down. All indications are that demand in the cheese complex seems to be the issue. It'll be interesting to see what the manufacturer has to do to get that sales volume back to its expected level. In the barrel, 163.64. That's a plus 4 to the CME 2 week average of 159.82. We traded 16 loads at the CME. That volume didn't do much to move the needle on the NDPSR, coming in over 1 million pounds short of our expected 13.5 million. So once again, volume on the NDPSR in both categories of cheese well below what we would expect. It's interesting. If you take the CME average of the blocks at 153.15 and the barrels at 159.82, that is essentially a 6.5 cent inverted spread. So barrels over the blocks. But with this differential in basis, blocks coming in 8 over, barrels coming in 4 over, we made 4 of that differential back. So here on the NDPSR, you have the barrels basically 2.5 over the blocks. A significantly better spread than what the CME would predict. Up next is whey, 49.07. That's a minus 3 to the CME 1 week average of 52.20. But of course, in whey, we're always looking at this February 17th number of 47.39. So the manufacturer was able to call over a penny and a half premium to prior week's NDPSR. And at that premium, almost 7.4 million pounds in sales. So just a massive amount of weight at the end of a 6-month rally in whey, as the spot whey has gone from 25 cents all the way up to 50 cents. NDPSR has slowly followed along, making big gains as of late. Minus 3 is lower than expected basis, but at the high end of the range, certainly an accomplishment. And I think the biggest win for the manufacturer is that they were able to clear almost 7.4 million pounds of weight at the high end of a 6-month rally in whey. And then lastly, non-fat, 120.31. That's a plus 2 to the CME 1 week average of 118.35. And our volume above both the 6-month and 12-month average sales volume coming in at 20 million pounds, 761. Average basis in non-fat on higher than expected volume. Certainly a win for the manufacturer there, at least relative to the benchmark at the CME. So this is week 1 of 5 for the March pricing cycle. Currently getting a March class 3 of 1660, March class 4, 1985. If you carry current CME equivalents all the way out through the 4-week April pricing cycle, not a big difference. April class 3, 1650, April class 4, up at $20 even. We'll see what they have in store for us at the CME in the weeks to come. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. See you next week. Bye.